This podcast is for educational purposes only. Options Geek LLC is not a broker dealer. Options Geek LLC and Felix Fry are not registered investment advisors. Options involve substantial risk and are not suitable for everyone. Please consult your own investment advisor before doing any trading. Make sure you read the full disclaimer at the end of this episode. Hey everyone, today's trade alert is Citibank. Let's take a look. All right, so we're here at the homepage on the Options Geek Tools platform, and we are looking at this box right here. First, top options trades. These are prints, individual prints. They give you the details and the time of the trade. So I have all stocks and 100 results. I'm going to also click this side to sort for ask, right? Because I'm looking for buyers. So I have these filters clicked, 100 results, and this is what I got here. It starts with above ask. So these traded above the ask, and the rest here down, got about, let's call it 10, 12 on the ask side. I look down quickly, just scanning. Uber call buying here, August. Open interest. They might just be covering a short there. Not sure. NVIDIA 460 calls on the ask. 8,000 might be covering that as well with the stock down so much. Intel. This one sticks out to me again because we've been seeing call buyers in Citi. The chart's interesting. I'll show you that in a second. And they've been buying the September 50 calls. Okay, so the September 50 calls, these are September 47.5 calls on the ask 5,000 times. Citi is down $1 today, and it looks like open interest 27,000. So let's look to see what this Citibank is. And here we could see this is the most active Citi strike. So these are strikes, total contracts within each strike, and then call or put with the open interest. So here we see that 23,000 options traded on the 50 calls, 10,000 traded on the 47.5 calls. On this box, it's going to give us the individual blocks. So 23,000 is the total contracts traded on that strike. Here, I'm going to look to see what are the individual blocks? Where are they? What are they? What's going on? So the top one is a 10,000 lot. This is 9,998 blocks. So another 2 lot came in to make 20,000. It looks, that's what happened there. So these are the SEP 50 calls, 2 lots, bid side 24 cents, traded at 11:12:43 and 11:12:34. It just so happens that we see the same time slot right here, the same time slot, 11:12:43 and 11:12:34. So these are trading together, the September 47s and the 50s. So what did he do? He looks like he has sold. They were buying the 50 calls. So this open interest is a large buyer. They sold 20,000 of these at 24 cents to close. Stock is down, so he's moving down strike. So they sold 20,000 and they bought 10,000 of the 47.5, paying 75 cents. That trade is called a 1x2. You do that when you're trying to roll down and not put up as much money as rolling 1 for 1. So you roll 1 for 2. Your break even is going to be taking out the premium is just going to be double the difference between 47.5 and 50. That's 2.5. Double is another 2.5. So that's 52.5. That's your break even without the premium. Add in the premium, you can do the math. But here we have 75 cents that we're paying, 24 cents 2 times. So that's 48 cents. So 75 cents minus 48 cents is 27 cents. That's what he's paying for this 1x2. 27 cents. If it lands at 50, he's going to make 250. It's going to be worth 250. He's going to make 250 less 27.5 cents, which is 223. So $2.23 potential to make on the 1x2 at the max level 50. He's just rolling down strikes with the stock down. So let's take a look at the chart and see what he's doing and how he's thinking about this. I tend to look early. My first look is going to be on the weekly on any chart. So I'm always looking at the weekly, kind of trying to get a picture of a long-term view of the stock, like what's happened. Obviously, I know COVID, there was a big downdraft. How did it come up? What has it been doing over the last year? Especially if I don't know the stock, I'm looking for a little bit longer term. I got the idea here. We got like a high near 70s. The low here was 28. Then you have this downtrend over about 2 years almost in Citi, and it's been doing nothing, basically sideways in a range. And actually, you can see this looks a little bit like a diamond here, a diamond bottom, maybe they call this. I don't know. I recognize the patterns. I'm not great with the names, but they have something like this, and you see it's symmetry on the left, symmetry on the right. Usually this is a reversal pattern. Okay, although like anything else, it could break down, and that's what some people are thinking with all the banks. But the banks have been trading well up until today, and we'll see. But this is usually after something like this coming down, it's usually a reversal back on the way up. But let's see. Let's go a little bit further into the details. So daily, let's look to see what the daily has. Okay, so the daily is the right side of that diamond structure. And you can see that we look something like, it looks something like that. I mean, this, I guess, could go this way, all the way this way, although you're breaking this, but you could have it like this. Either way, there's this wedge. I try not to get so perfect. I kind of want the general idea. And they were buying these in July after the earnings when the banks all ripped and JP Morgan all ripped. And he was buying remember, he's buying the 50 line, right? The 50 line. And now that the stock didn't break through, the stock did not break through, he has rolled these down to the 47 and a halves down here, 47 and a half. Okay. So he's looking for a push back up towards the 50, but if it breaks, I mean, he's got 50,000, 40,000 left, sorry, of these 50 calls. So he's hoping that this thing goes up. If it breaks down, I think this is a long player. I think the earnings in the banks are good. I think he's trying to buy the stock and be long the stock, is my opinion. He may be just playing it for a bounce within this wedge. Although I think they're trying, because he was buying those 50s, he sees this technical setup and they're looking for a breakthrough here. So usually the right answer is to stay away from these wedges until it actually breaks here, this wedge up, or it breaks it down on good volume, right? So you want to see break up or break down on good volume. And then you can sort of get in there with confidence that the volume came in. There's a buyer. If it went up, there's a buyer into the name. And, you got a little bit of wind at your back there. So I would play this outside the wedges. He seems to think that he's got the inside track on this thing's going to break through. Maybe, maybe not. We'll see. But that's the flow we're seeing today in Citibank. This 50 call buyer, he's rolling down to the 47 and a halves, doing about a third of his position. Nonetheless, he still thinks a breakout to the upside. So if you want trade alerts like these, click the link below and join the top 1% club. I give 5 of these each day, Monday to Thursday. Don't forget to smash the like button, ask questions, or throw in a comment. Take care.